Ladies and gentlemen, fellow traders, friends, there is no perfect trading plan, and that's what we're going to talk about today. We're going to talk about that trading plan that you're struggling with, that trading plan that you're chasing, that never-ending cycle of doom that you're on. Don't forget, trading's risky. Most traders do lose money, and if you don't like risk and you don't like losing money, you probably shouldn't be trading. But today I'm just going to talk to you about that trading plan, that most traders fail with, jumping from strategy to strategy to strategy, looking for YouTubers like myself and others which have little plans and things in place, and you're trying to find that magic pill, you're trying to find that thing that's going to fall out the sky and create a Lamborghini or a Ferrari for you, and you're chasing and chasing and chasing, and you're just never getting to the end. You're just never finding it. But before we get there, let's say hello to everyone. Let's get started, and then we'll go and talk about those things that we need to talk about. Hello, Blue Mango. Hello, Elaine. Good to see you. Happy Thursday. Lovely to have you here. Good to see you on board. Since we're waiting for everyone, we won't get started just yet. We'll just talk a little bit about the trades. We'll talk a little bit about the markets. Now they've been going. So before we go anywhere, let me just move my little picture out of the way and sort of make it a little bit smaller, because obviously it's humongous at the moment, and there's my big head in the way again. So I'm just going to put that to the top, out of the way, so that we can actually see some charts, and we can just go and have a look at the wee charts and see where we stand. This was today's sort of choice of trade, which hasn't quite worked out yet. I wanted to go short on the Japan Nikkei, and it's come down, but there's this big green candle that's a real pain at the moment and hasn't gone away. But if you look at this, it's hitting resistance, hitting support, it's in the channel, so I'm looking at that scenario with that trade. The big thing this morning was the S&P 500. The S&P 500 was looking rather bullish because NVIDIA had fantastic results, as it always does. It hasn't failed to impress over the last few years. So NVIDIA has been the darling of the market. Let's hope they remain that way, because when shares are usually the darling of the market, something disastrous happens at the end of the day. But let's hope that doesn't happen. Let's hope everything stays in place. And it's actually gone really well. You've got this big boost up, which is caused by the NASDAQ. My concern for all of this, as you can see, I've drawn a little sort of slow bearish sort of fall over on the S&P here, where it's kind of just remaining bearish as we stand at the moment. Now, the big thing here to understand is the NASDAQ has gone crazy. The NASDAQ has jumped straight up, obviously, because NVIDIA is part of the NASDAQ, and it's jumped up, broken through structure, and it's moved up nicely. But my big concern is not there. It's that the Dow Jones is lingering in its range, and it hasn't done anything. So it kind of means that the rest of the market is just stagnating, while NVIDIA is shooting off to the top. Now, what we've got to be careful of is on the tech stocks, on the NASDAQ, there's only a few stocks, they call it the Magnificent Seven. There's only a few stocks that make a difference, and NVIDIA is one of the biggest. So if NVIDIA moves and one or two of the others follow, you're going to get a big move in the NASDAQ, and it's going to push the S&P slightly. But it doesn't mean that the economy's resolved, that everything's fine. On the flip side, the market is made up of shares, and those shares, when they give you a good result, normally tell you that things are going well. These companies are making a profit for whatever rhyme or reason. And if a company's making a profit, if the country's doing well, why are we calling it bad? Why are we saying there's something wrong? So we have to look at it from that perspective as well. And countries are made up of their economies. They're made up of their asset value. So when shares are moving up, surely the country must be moving forwards as well. Sometimes these things can be inflationary issues, but generally you have to look at it from a bigger picture. But as I said, I'm going to talk to you today about that never-ending cycle of doom. I'm going to talk to you today about jumping from strategy to strategy and why it's causing a lot of failure. I did go short on the US dollar, Canadian dollar. It sort of went short and it's stagnated here. It's done nothing, kind of waiting for it to fall over and just sort of drop off the edge of the cliff there for us, make us some dosh. And we've also got the UK, the oil, which is now starting to fall down. And that might be starting to fall down because they're getting some kind of resolution in the geopolitics. And that is generally the case with these things. And I noticed that Bitcoin is tending to follow the indexes, and it's followed the indexes up. For some other unknown reason, crypto has been following the indexes. It's interesting, isn't it, that it's actually doing that? But yeah, interestingly enough, that's what happens. But as I said earlier, what you find yourself doing is overcomplicating your plan, overcomplicating your execution, overcomplicating everything that you do, looking for different strategies all the time. Because what actually happens is you get into a strategy, a very complicated strategy. Let's say you get into the moving average crossover strategy, or the MACD strategy, or the RSI strategy, Ichimoku. Ichimoku is quite nice and complicated. You get involved in all that and you start following it, and let's say it works for you. It works for you for a few trades, and then it starts not working and you start struggling with it. So immediately, what do? You go and jump over, and you go and look for another trading system or some other magic pool, because all the other traders out there are making money. So surely I should be making money as well, because they're all, showing off their $100 bills and Ferraris and Lamborghinis in the driveway and big flashy house. Those flashy houses, wow, amazing, isn't it? Anyway, so you see all that and you think, well, surely if they're making all that money, they must have a good system. So off you go, and you go and look for that system. You go and jump in, and you go and check that system out, and you think, oh, that looks good, actually. It actually looks good, because it sounds good, doesn't it? It sounds great. They all work. That's the problem. They all work. They're actually all successful, because every trader is trading with or against another trader. So every trader's got his system, and every trader will call it different ways. Otherwise, you wouldn't have a market. Everything would just go in a straight line if everything was the same. So you choose that person's system, and you jump in and you start trading it, and it's all good, and you overcomplicate it, and you put all kinds of little lines in and all kinds of little things, and you fill your charts up with lines, and you put 20 screens over your wall, and it works for a while. It works for a while. Now, what do? Yeah, you go and you start losing again, and things not working out, and that's not your fault, is it? Must be the system. So you see Joe over there doing really well, and you think, well, I'll go and have a look at his system now. And that might be some other system again. Maybe it's Fibonacci or something. So you jump into that system because that guy's got Ferraris and that sort of stuff in his driveway, and he's showing you money falling out the sky. So you go and follow that guy's system, and you start doing that. I call it the never-ending cycle of doom. You may have seen one of my videos where I've gone over this in detail before. And it just goes around and around and around and around, because eventually you come back to where you started, and you think, oh, I better just go back to basics and start again, and you do it all again. But you never get to the bottom of it. You never quite understand why you're losing. You never quite pick up the reason behind why you're struggling in the markets. And that reason is you. It's not me. It's not the lines. It's not the system. In fact, it's not even the business plan. It's you. You see, you can copy me to the T. You can copy exactly what I'm doing. Or you can copy Joe or Pete or Johan or whoever you like. You can copy any one of them 100% to the T. But do you know what's going to happen? You're going to trade differently. You're not going to trade the same way, because we all have different brains. We all have a different psychology. We all have a different fear level. We all have a different risk level. Our risk adverseness is different. So in other words, when it comes to taking the trade, the size of the trade will be different. The effectiveness of the trade will be different. The reasons behind the trade will be different, even though it looks the same. And also, you may be trading for different reasons. For example, one person will be trading just because they're having fun. Another will be trading because they want to make an investment and grow their account. Another one will be trading because they need to make a living and they're desperate and they're trying to get a salary out of this. If you're trying to get a salary out of it, that's the most dangerous one, because that's where the risk becomes a problem and becomes an issue. You see, it's all in the fear. It's all in the fear of missing out, and it's all in the patience. A lot of traders become very impatient when they don't see themselves making money quickly. And that's usually a trader who needs to make an income from the trades. That's usually a trader who's looking to try and make a salary from trading. And if you're trying to make a salary from trading, understand this one really important thing. That is, you need a lot of capital. You cannot start a business without capital. I learned this when I was 27 years old, and I had this little bit of money. It equated to about $10,000. I'll make a video on it and I'll tell you a story. Okay, it wasn't $10,000, it was rands, okay? But if you equated it to dollars, it was about $10,000. It was about 150 or 170,000 rand at that time. I was young. At that time, that was a lot of money. It was probably about 1.5 million rand now. I don't know. But I thought it was a lot of money. I'd sold a couple of properties and I'd made a profit. And I thought, this is great. I've got all this money. Surely I can just go and sit at home and start trading now at 27 years old. Just had, I've got a wife, got a child. All these things are happening to me. Okay. And I do this. I go and sit at home. And then I realize, well, hang on a minute. It's not actually enough money. It's not actually enough. Even though in those days, I mean, you could literally live on 3,000 or 4,000 rand a month after tax. It wasn't a lot of money that you needed back then. But I didn't have enough to do trading and make a living out of it. I could grow the account. I could make a big account out of it. But could I really make a living out of it? Was that enough to pay for your house? I mean, I had a big house, a couple of cars, all these fancy things. Now you need to pay for all this stuff. And I realized that small amounts are not good enough to make a living out of. So what did I do? I went and I had to start a business. I got investors, I got partners, I got all kinds of things going on there to grow that money so that I could continue on trading at the end of the day, so that I could do that alongside and eventually sell the business and end up with enough money to trade with. So that sudden realization comes to you. You know, you realize, well, I was young and stupid. I didn't realize, that type of thing. But, you're always looking towards, I need to get out of this. I need to be on my own. I need to have a really good, easy life. And it becomes harder work than you ever dreamed that it would. So most traders fail because they keep jumping from strategy to strategy. So I always give you my simple strategy, and my simple strategy is always, if you're going to take a trade, just keep the risk the same and always look at the risk first. And where's your risk? Your risk is over there. So you're going to say, okay, I want to put my stop loss there, $1,000, and I want to try and make $4,000 with my profit down there. Always try and keep the risk the same on every single trade, as close to $1,000 as possible, $10,000, $100,000, whatever size trade you're taking, and just make sure it's the same on every trade. And then try and make as much as you can on your win. That's as simple as the strategy gets, but I'll explain the strategy to you. It's not a problem. I'll explain it in every single video. I had a guy the other day comment that I didn't explain stop loss to you, and I just fell off my chair laughing, because you guys will all know that in every single video, all I talk about is managing your trade and putting a stop loss in. And when I saw that comment, I couldn't help but laugh, because that was just so stupid. It was unbelievable. When have I ever not really told you about managing your trade? So anyway, that was quite funny. I thought it was hilarious, to be fair. Sometimes I get quite amused by some of the things that I hear and see in the comments and that type of thing. But I just thought I'd go over this today, because it's really important, And then, like I always say to you, most traders quit just before they break through. Before they understand, before they get the aha moment, before they realize that you just need to make more on your profits and lose less on your losses. And it's not that difficult when you think about it. It's just that you don't want to listen. You don't want to hear it. You don't want. I never, for many years, I used to hear the experts say, you can only make money with time in the market. And I used to say, they're rubbish. There's all these traders out there making money. And then I only realized how the traders actually make the money is by simply going, well, you know what? You just got to make more on your profits and lose less on your losses. And when you put it in that simple, then it suddenly becomes easy. Try and keep your strategy simple. Don't overcomplicate it. Forget about all the abbreviations and all the fancy terminology in the markets. You know, so many traders will come to you and all of their thing will be about all the terminology in the market, all the fancy names, all the fancy abbreviations and whatnot, because they want to look intelligent in the market. They want to look like they're a clever trader. They know all about markets, but they know nothing about profit. They know nothing about actually making money. They've probably never even had a proper business in their life. I've had 4, 5 businesses in my life. Actually, yeah, more. It's insane. I've had businesses, I've had companies, I've had PTY limiteds. I understand business. I understand an asset and liabilities. You know, where these guys just come out there with their trading jargon and think they know it all. And it's simple. All you have to do is take it back to basics and understand that whatever you do in life, whatever you do, whatever you decide to do to make money, the basic principle is you want to buy it for a certain price and sell it for a higher price because you want to make a profit. And with that profit, you want to be able to pay for all your overheads, and you want to be able to pay yourself a wage. You want to be able to pay yourself a bit of money so that you can buy nice things and have a good life, maybe buy decent food, whatever it might be. I'm not saying you have to become a billionaire or become rich. I'm just saying you have to survive. That's all. I haven't worked for a boss since I was 27 years old. Yes, I jumped out, not even thinking about it properly, but probably that was the best thing that could have ever happened to me at the end of the day. Thought I'd go over that, and I thought that would be helpful to you in some way or another. But always remember, trading's 50-50. Well, no matter what trade you take, it's always going to be a 50-50 trade, and that's got nothing to do with risk to reward. It's got nothing to do with your edge. It's got nothing to do with anything except the fact that when you press that button, you're not a fortune teller. I'm not a fortune teller. The charts are not a fortune teller. They can't predict the future. The historical past cannot predict the future. The future can only predict the future, and you don't know what that is. So how are you going to predict it? So that's why when you press the button, you don't know what's going to happen. You don't know what's going to happen next. Nobody does. Generally, most traders, most good traders, get it right 50% of the time. Doesn't matter whether people believe it or not, or understand it or not. It's just what it is. Most traders, most good traders, get it right half the time. The other half the time, they get it wrong. The sooner you understand that, the sooner you work it out. The sooner you realize, hey, you know what? I need to make more on my profits, lose less on my losses. Keep it simple. Don't worry about all the jargon, all the charts, all the rubbish that goes on behind it. Just keep it easy and simple, and you won't struggle as much. Let me say hello to everyone, and morning, Sir Lunchalot. SLA, you early today. That's great. Good to see you. What's your take on using smaller clients with high risk to reward to make big money quickly or blow them up? My take on using small accounts with high risk to reward to make big money quickly or blow them up is that's not going to work. It's just not going to work, because whether you use a lot of different accounts and blow them up, or whether you use one account and grow it steadily, same thing, isn't it? You're still going to lose half the trades, which means if you have 10 accounts, if you take 10 accounts, you create 10 accounts and you're going to risk big, okay, because you want to now grow them. The probability is you'll probably win 5 out of the 10 trades and blow the other 5 accounts. It kind of works out the same at the end of the day if you're going to run your profits, because when you want, what you're talking about there is running your profits. In other words, looking for that 4-to-1, looking for that big win, or risking high. You're going to risk that money anyway, one way or another. The idea is you want to win 5 of them, and the other 5 you're probably going to lose. So Okay, let's say you got $10,000. So what you're going to do, you're going to open $10,000 worth of accounts, which means 10 accounts. So firstly, it's going to cost you money to open those accounts. I mean, it's not all free, is it? And then, okay, so you're going to lose 5 of them. So you've lost that $5,000. Then on the other 5, you're obviously aiming to win big. Simple, really, isn't it? Isn't that exactly what I tell you to do on one account? Try and win big on 5 of the trades and lose the other 5. Nothing's going to change. The only difference is you're blowing 5 accounts and you creating 5 other accounts that have made a profit, and it's kind of where it goes. It's not going to make more profit because it's an account on its own. It's going to make the same profit whether you're trading on one account or whether it's an account on its own. The logic behind it, I get where it's going, but it doesn't make sense when you do the maths. When you work out the reality, you see there's always reality that you've got to look at. And the reality is when you get into the trade, everything's different. You see, theoretically, everything looks great on the outside. Theoretically, it's great. I can open 10 accounts, I can blow a few accounts, I can make a bit of money. But practically, it's the same as if you got one account and you take 10 trades and you follow the risk. And it's going to do the same to you as it would if you were just doing it under a normal trading condition. I mean, if the trade's going to sort of go towards the target profit and then fall away, then it's going to do that, isn't it? It's probably a worse condition than trading on one account, because if you're trading on one account, you'll realize that the trade's starting to go against you on any particular time, and you'll take the profit and you'll get out. Whereas if you're just going for the accounts and trying to make those accounts bigger and bigger and bigger and bigger and bigger, then you might find that might go against you because you might let it run too far. Difficult to say. Everybody's got their theory, everybody's got their plan, and like I say, every single system works. Everybody's plan is a plan. And is it different to anything else? No, it's the same thing. Risk big, make money. Risk small, make money. I will say target the bigger amounts. I get what you're saying with that, but I just can't see the end of it. I can't see the outcome. Robots are taking, and the very next comment after that, high risk to reward on the small accounts, is I'm on the streak of getting my trades wrong. Okay, so if you listen to I'm on the streak of getting my trades wrong, so imagine if you open 10 accounts at $1,000 each, and you're going to risk maximum on each account, and you're on a run of getting your trades wrong, you're going to lose all 10 accounts, and then what, right? Whereas if you use your proper risk to reward structure that I've actually put forward to all you guys to use, that you're welcome to use, the strategy of make more on your wins, lose less on your losses. You're getting out of your losses quicker. You're taking losses, but you're getting out of them, and you're waiting for that big win to come along. And when that big win comes along, then you're going to make the money on it, and you're going to follow the trade, and you're going to follow it up, and it's going to be worth your while. And then you're going to make all that money back on your run of losses. But once you've closed those 10 accounts, you've kind of closed them. They're kind of gone. Be careful of that. Be careful of that. Is someone in Great British Pound JPY? It would probably be the same as the US dollar JPY, and the US dollar JPY at the moment is moving to the upside, and I get that it's slightly bullish, but at the moment, as the price stands at the moment, and this is a bit like relative strength, overbought, oversold scenarios, because my brain works that way. For me, the US dollar Japanese yen is way overbought, in the sense that I know they don't like it above 150. It's close to 160. I'm doubting that they're going to allow it easily to go past the 160. They're going to do everything in their power to push it down. It's just being a very petulant child. Every time they push it down, it bounces up. They push it down, it bounces up. I presume that it's going to get pushed down again. So I'm just waiting for an opportunity to get a short on the US dollar Japanese yen. Probably the same on the Great British Pound US Japanese yen. So no, I wouldn't be taking a long on this particular type of trade, simply because I know, when you've been in the market for a really long time, like I have, it's a long time, you kind of just these things are stuck in the back of your mind. Now, they can be good for you and they can be bad for you, because the bad part is that you've got a pattern in your mind which is probably blocking you out from doing something that you should be doing sometimes. That's the bad side. But the good side is you've got all that information in your head. You've seen it all before, and you know what the pattern is on most of the products and the important products and that sort of thing. So you kind of use that pattern as a red flag, warning signal, whatever the case, and you go with that. Yeah, so that's probably where it is with me. Is someone like that? Euro JPY shorts on my end. Shorts, yeah, there you go, shorts. Rob, you always make sense. Thanks. I struggle with risk management, a bit keen on running too many trades at the same time. I wouldn't run too many trades at the same time. There's no need to run too many trades at the same time. You can take them one by one, 2 by 2, 3 by 3. Check what you feel comfortable with. How many trades are you actually comfortable with holding at any one time? The nice thing is if you do have 5 trades on a run at any one time, and 3 of them are winning and 2 of them are losing, then at least you see some green at the end of the day. But the point is, you've got to run with the winners and just dump the losers as quickly as possible, get them out of your system and move on to the next trade. You're going to take a lot of losses, but you've got to find those big winners, and that's where that's what will get you your confidence. The difficult part is when people get into trading and they lose the first 10 or 20 trades without winning. That can be quite daunting. So it's nice if you can win a couple, lose a couple, win a couple, lose a couple, because then you get the feeling for it, as long as you don't take big losses. Because what most new traders do is they allow their losses to run and then they take big losses, and that hurts the account. And once the account is hurt, it's really, really, really difficult to recover it. You'll be surprised how difficult it is to recover a broken account. So it's much better to take tiny losses, because then you can recover the account that much better. And watch out for that. Yeah, so it's good to have you all here again. It's good to see you again. So I hope that made sense, the better plan, the strategy to strategy, and the never-ending cycle of doom. But yeah, guys, there is no perfect trading plan. I mean, I've heard it all before. Everybody's got the perfect trading plan. There isn't a perfect trading plan. But the plan that I come up with is kind of just sort of straightforward, simple, and easy. And it's just out there to try and make you less on your losses and make you more on wins. That's as simple as my plan gets. It's not perfect, but it'll do the job. It'll make it easier for all of us, and it'll give you that opportunity to make money at the end of the day. There's too many people out there that will tell you that you can make money from charts and it's easy, and if you just follow this and follow that and wait for the moon to move slightly to the left 5 degrees and the earth tip slightly to the right, then you might just, take a trade and you're going to make money. No, it doesn't work like that. It never does. Every single trade you take is going to be a 50-50 trade, and there's nothing you can do about it. Absolutely nothing you can do about it. If you're in this game, that's what it's about. And if you're in it to make a wage or an income, understand that you're going to need capital to do that, and a lot of capital to do that. After a couple of years in trading and you've learned how to trade and you know what you're doing, then you can start possibly working on, I'll make 20-25% on my income on trading, and off that, it'll grow by that amount, which you wouldn't get from a bank anyway. So it's not too bad, when you get to that point and you're making that kind of money. But then you've got to understand how much capital you need to make a living with 20-25% of the money. And then you get to a point where you can, sometimes some years are good, some years you make 50%, 60%, other years you make nothing. So you've got to live with that as well. You've got to work around that scenario. It's not as straightforward as, I'm just going to make 20% every year. It doesn't work like that. And then sometimes you get that odd, what we call a 10-bagger. You get that odd one that runs. It runs and it makes you an absolute fortune. Those, when they come, they're really great. They're exciting. They make you feel better. But don't let them make you overconfident, because, while I say trading is not luck, sometimes something like that. You chose the trade, let's say, and you knew it was going to go that way. But how many times have you chosen the trade knowing it's going to go that way, and then it doesn't go that way, goes against you? Let's say you took this short, and you listened to Rob's trade of the day, I think it was Monday or something, and you said, I'm going to go short on the Euro Great British Pound, and you got in, and it shot down, and it made you an absolute fortune. You took the trade, it wasn't luck. You understood the trade, it wasn't luck. You had a plan, it wasn't luck. Okay? But for it to do that, sometimes there is a little bit of good luck involved in that. You know, like, hey, you know what? It actually made me a fortune. It was a 10-bagger. Because you know that everyone's not going to be a 10-bagger. You actually know that it's going to take a lot of trades before you come across a 10-bagger. But those 10-baggers are the ones that make you feel good inside, they make you feel better inside, and they make you lots of money. It's like this one. Let's say you took this trade long right at the bottom here, and it gave you that long run up to that point there. That's going to make you feel really good, because that's going to make you a lot of money. And then if you held on and all the way to the top there, even better. So yeah, 10-baggers can make you feel really good. I mean, that's just obvious, isn't it? Now, oil is looking a little bit iffy, so obviously that's kind of changing its plan. I struggle with this minute. Too much trades on the higher time frame is also my biggest problem as I switch to the 4-hour daily. I'm getting to the point where I stop worrying about losses after so many of them, just focusing on the execution. That's actually exactly what I say. Focus on the execution, focus on the plan to make more on your wins and lose less on your losses. Don't follow your losses, let the losses go. You're going to make a lot of losses. Now, what you've got to be careful of, though, is there going to be a lot of trades that you take, and you're going to take a trade, and you're going to say, I'm going to take this trade, and then you take this trade. Say you take this trade short, and then it goes long. It's going to do that every time. It's going to go against you a little bit and then come right. So don't keep your stop losses too close. Give yourself that space. Give yourself that room, because on the 4-hour, you can give yourself enough room to see if the trade's working out. It's not like a 5-minute trade where it just goes against you and just like takes you out. 4-hour gives you a lot of space to work out if the trade's working or not. So give yourself that room, give yourself that space to see, yeah, that's going to work in my favor. Because very, very often, probably 8 times out of 10, when you take a trade, it might just go against you a little bit before it goes for you. I think the US dollar, Canadian dollar, you know, there's an example of that. Well, actually, now it's like messing me around. It actually went for me. Now it's going against me a little bit. Now, hopefully it'll go for me again. So you got to be careful. Give yourself that room. Don't panic, and don't jump out of the trades too early, and don't put too many losses in your account as well. So let these things run a little bit, but keep your stop losses less and your profits more. Because if this runs all the way to profit, big win here. As you can see, it's a huge win here. And that's what you're looking for. You're looking for that huge one down to the bottom. That's always what you're looking for. But you want to keep your losses as close as possible. But had you gone short on Bitcoin here, it's not to say that, oh, I must panic now and get out. You know, use common sense and say, well, there's the high, there's the high, there's the high, there's the high. I've only really failed if it goes past those highs and starts going the other way, and totally failed if it goes past back into that level there. Look at those levels. Look at it like you were buying the trade. If you're in the trade and you feel like it's going against you, just look at it as on the opposite structure. If I'm in a sell, if I was going to buy this trade, where would I buy it? And if that's the case, if you would buy it there, then your trade has failed. Get out as soon as you can and move on to the next trade. That's the best way to look at your trades, the best way to pick it up. This US dollar ZAR is stuck in this range at the moment. And somewhere down the line, this is going to go the other way and start going up. That's for sure. It is going to start changing direction, because there's no way that the US dollar ZAR can keep on going down. That said, there's no such thing as no way, is there? These things do what they want to, and they tend to do whatever they need to, obviously, and they'll just sort of go the other way if they want to, and there's nothing you can do about it. You just do that, follow that. Good afternoon from India. Kevin, how's it going? Good to see you, Kevin. Lovely to see you on board. I hope you're trading again and everything's going well. And you're making lots and lots of money, hopefully. As are all the other traders here, making loads and loads and loads and tons of money. Aren't you? You see how difficult trading is when you get into it, it looks simple, it looks easy, until you actually start taking the trades and you start trying to make the profits and your real money's in the account and you start trying to watch the money go up and down, and suddenly it becomes more difficult to follow. It's a different ball game. I'll admit that in some cases, somebody said it here earlier, that I believe funded trading has made it a lot easier for people. Funded trading has made it less difficult for people to trade. But that said, you've got to get the money out of them and you've got to get your percentage out of them and you've got to get certain points. Whereas if you've got cash and you're trading with cash, then your cash is in the account, and if you want to take $5 from it, you can, and it's not that difficult. So yeah, if there's any questions, I will take them. Yeah, profits, yeah, maybe next week. Yeah, no, totally. So there seems to be quite a big trading community in India as well. Chap said hello from India. Quite a big trading community there. Big trading community in the US, big trading community in the UK. So it's actually quite interesting. Australia, South Africa, there's quite a decent trading community. So the communities are actually quite big on YouTube that are growing in these areas. That's always good. Oil is interesting. I'm just interested in what's happening with oil at the moment as a result of what's happening in... I'm knocking my microphone over here. That's not going to be good, is it? You won't be able to hear me. What's happening in these Gulf areas and that sort of thing. It's going to affect the oil quite immensely. So I'm going to keep an eye on it and just see. Okay. Let's see what else we've got. Euro, Great British Pound. Where are you going? Yeah, interesting. This one broke to the downside quite nicely. Looked good. And it's just sort of bouncing back up at the moment. Running out of steam. But this is sort of, it's like a bit of a sort of little bounce, and there's a lot of sellers coming in. You know what you guys need to look out for is these tails on these candles. Watch these tails on these candles. These tails give you a lot of information. If you've got a body at the bottom and a big tail at the top, all the sellers have got into the market. If you've got a body at the top and a big tail at the bottom, all the buyers have got back into the market. Kind of tells you which way things are going to go. So lots of sellers getting back into the market. Next candle's red. Good chance this is going to come back down to these levels down here and continue on to the downside with the Euro, Great British Pound. Just keep your eyes on that. It helps you. We all live in hope, yeah. It's the next big niche trading. Yes, it is the next big niche trading. Actually, Kevin, maybe you weren't here when I was talking earlier about how I started out and how I realized that I had, at about 27 years old, that I had too little money. I didn't have enough money to actually make a living from trading, and I actually ended up having to start a business at that time to try and make enough money to continue on trading with. So I worked harder than I'd ever worked before, because I mean, I left a job that gave me 2 company cars and a big salary, and it was a fancy job and all the rest of it. And because I didn't want to work for a boss, I thought, no, I'll go sit at home and trade. And I'd done some investments in properties and that and made some money, and I thought I had loads of money. I didn't really have enough. At that time, I had about 170,000 Rand back then when I was 27. And it was a lot of money then, but it wasn't enough. I remember that. But I was able to start a business, and I got a few investors, and it actually made a lot of money. And then I was able to, I got an offer I couldn't refuse, and that helped me with my trading as well, because that went into investments and and all that sort of stuff, and that kicked off. So it was a good thing that happened. It's not the worst thing that could have happened. Yeah. Yeah, that's it's never easy. It's never easy. And what I see a lot these days, which is actually worse, because if you're young and you do these silly things, and you can take evasive action, and you can, for example, do what I did, maybe start a business or get another job or whatever the case. And then you can trade alongside it and realize, well, I need a lot more money than that to actually just trade. And then, when you're that age, it's easy. But what I see a lot of is older guys like myself, or along my age group, which we won't discuss right now, maybe another day. I know you're all older than me or my age, but what happens is a lot of guys leave work, get retrenched from work, get laid off because they're older, or maybe get a pension, whatever the case, early retirements, that sort of thing. And then you're sitting with this reasonable pot of money, sometimes small, sometimes big, not sure what to do with it. Now, the scary thing for me is the amount of people that immediately just see these guys on YouTube telling them they're driving Ferraris and Lamborghinis and all that. And they jump into trading. They start doing day trading on 5-minute charts, that sort of thing. And they take, those pensions and that kind of money, and they throw it into the markets, and it gets swallowed up. And the problem with that is it's really difficult for those kinds of people to recover because of their age group, to get back into the market, to do things. I mean, I'm not in the mood for starting another huge company or business or anything to that effect. I just want to enjoy my life now. And that's if you can. Many people cannot. So you've got to be careful when you're older and you start throwing money at things like this. You've got to be risk adverse. You've got to be very careful with your risk. When you're 30 years old, 40 years old, you can go mad. But when you start going into your 60s and that sort of thing, you've got to be more careful. Definitely got to be more careful. How to simplify the execution. I do use simple moving average, but sometimes I just mess up with my executions. Any advice for me, please? The execution, okay, I don't use the simple moving average, but it really doesn't matter, okay, what you use. What I always tell people is just take the trade. What you have to understand is whether you're using the simple moving average, support and resistance, trend lines, Fibonacci, Ichimoku, RSI, MACD, it just doesn't matter, okay? It doesn't matter which one you're using. And I mean, simple moving average, I've used it before, and the way I used it was effectively, if the 8-day crosses the 20-day, then I'll buy, and if it crosses the other way, I'll sell. And if you're using longer term, like for example, 50-day and 200-day moving average, that everyone uses that. So yeah, no problem. What you've got to do is say to yourself, that's my plan. My plan is that when the 8-day moving average or the 9-day moving average, whichever one you've chosen, crosses over the 20-day, I must buy. When it does that, you have to take the trade because that's your plan. So for example, with me, my plan is to have a resistance, to have a support. My plan is that every time it hits that resistance, I know there's money there, there's liquidity. So I know that liquidity sits there. So I know that's going to go down. I see red candles going down, but I confirm it for myself by putting a little trend line in. I have a plan that when it breaks that trend, then it's broken the structure to that side, and I know it's coming back down to the support. That's my plan. My plan is when I get a red candle closed below it, is to sell and sell it to the short side, and then wait and wait and wait and wait and wait until it gets there and makes me the money. Not to get out early, not to follow my losses, to manage my risk and put my stop loss in place. If you didn't see the beginning of the video, where I went over the strategy quite clearly, and I said, always keep your risk the same, manage your losses, put your stop loss in place first, work out the size of your trade, make more on your wins. So it doesn't matter whether you're using simple moving average, whether you're using anything else. As long as you have the strategy in place and you understand that you need to make more on your wins, lose less on your losses, then it becomes rather simple. You just need to take the trade, because the next thing you have to understand is that you're going to lose either half your trades, or maybe even more than half your trades. Good possibility you're going to lose more than half your trades. Unfortunately, just accept that and take it for what it is. The escape plan or the get out plan, where do I take my profits, is one of the questions I get quite often. I do have videos on that on my system. Go and look for those videos. But if you're looking to take your profits, what you've got to do is take your stop loss when you're in profit, move it up behind the price into profit, into break even. So the trade's now costing you nothing. And as it goes further into profit, you move your stop loss down. When it gets to your profit target, if it gets that far, which is great, don't take the profit. Keep moving your stop loss behind the profit and try and make as much as you possibly can all the way to the end. That's how you take your trades. That's how you follow your trades. My only advice to you is just take the trade. If you take the trade, then you'll make the money or lose the money, whichever. But take the trade, because if you don't take any trades, then you can't make the money. The other thing is, as was mentioned earlier, how many trades can you take? Decide for yourself how many trades you want to take at any one time. Do I want to take 5 trades at one time? Do I want to take 3 trades at one time? Do I want to take 18 trades at one time? Totally up to you. My philosophy is simple. If there's 18 blocks here, 18 trades, and I take all of these at one time, if I want to, let's say I do that. My philosophy is simple. 18 trades, I lose 9 at $1,000 per trade. $9,000 is gone out the window. I'm not worried about that because I've got another 9 trades, and on the other 9 trades, I win. And if you work it all out, whether some of them are 1-to-1, some of them are 6-to-1, some of them are 4-to-1, some of them are 2, it generally averages out to about 2-to-1, sometimes better. Now, I've made $18,000 on the other 9. I've lost $9,000 on the ones that I lost. That, for me, mathematically gives me a $9,000 profit on those 18 trades. So once you get to that point where you understand that, then it suddenly becomes easy to take the trades, because you understand that out of all those trades, the law of averages, if I was to flip a coin, I mean, it would land on heads 5 times, it would land on tails 5 times. That's the probability. That is always the probability. So what I'm looking at is the probability that it'll land in my favor 5 times. The ones that land in my favor, I want to try and make a little bit more on. So if I told you, if you chose tails and I said to you, okay, for every tails, I'll give you 2, and for every heads, you lose 1. There isn't a trader in the world or someone that wanted to choose a flip coin that wouldn't take that offer, because it's obvious it's in your favor. Even if you only won 4 times or 3 times, you're still in profit. You're still doing well. And that's the whole base of the plan, is based on a simple coin flip. If you flip a coin 10 times and you win 5 times and you're getting more on the win, you're going to win. Simple, really. It's not complicated. It's easy. But it sounds difficult, but it's easy. It's based on such simplification. It's unbelievable. The funny thing for me is I made all this up in my head many years ago, all those years ago when I was a youngster, because the experts kept telling me over and over again, Rob, you can only make money with time in the market. And while I did have investments and time in the market, I thought, well, I want to be rich now, not when I'm 100. And that was always my point. I want to make the money now. And that's what most traders want to do. Most traders want to make the money now, not when they're old. So then I realized how to apply time in the market to trading, to leverage trading. And it was as simple as make more on the wins. Forget about the trading, forget about the charts, forget about the win rates, forget about the candles. Just use them to manage your trade. Just use the picture to manage your trade and make the money, make the profit. Once you start learning to make more profit. See, because I'd had businesses, I understood that if I bought stock and the stock cost me 100,000, I had a formula, and the formula was simple. The formula was if I bought 100,000 worth of stock, I would multiply it by 3 and put the price on it at 300,000. That's how restaurants work. That's how any retail store works. Okay. So you would put the price on it at 300,000. If I had a really good customer or I had to adjust the price, I could give up to 50% discount on that, and I'd still be making a profit of 50%. Because if I have a 300,000 Rand priced item and I give you 50% discount on it, then you're getting it for 150,000. I paid 100,000. Simple maths. Okay. So that's how it worked in my business. Why wouldn't it work in my trading? Why couldn't I make a profit in my trading? Why couldn't I pay less in my trading and make more and more profits? I couldn't do it exactly the same way. I can't force people to buy things. So I simply applied a simple basic concept of make profit. Make a profit on your items. Make money on your items. No matter how much, make profit on everything that you buy and try and sell it for a profit. And if you can't, get rid of it. We used to have a stock policy. I had a stock policy. If it was lying around on the shelf and it was dying, it was taking up space, anything that was taking up space was costing me money. It's costing me money because it's lying on my shelves. It's taking up real estate. And that real estate needs to be used for something profitable. So if it was taking up real estate, sell it at cost, get rid of it or dump it. Move on to the next thing because you bought something that nobody wants and it's a load of old rubbish. And that's kind of how we operated. Very simple. And that's how I apply my trading. I simply apply that same concept to my trading, and it makes me money at the end of the day. In some cases, because you see now I'm losing here, this is a loss. Okay. At what point is it a good move, stop loss, way to the take profit target? At what point is it good to move the stop loss to the take profit target? So let's take this trade here. This trade here, we've got a situation where we've taken the trade at this point. Now, obviously now is not a good time to move the stop loss. The stop loss is in its place. The stop loss is in an invalidation area. For me, if the price gets there, I've made a mistake. I've got this completely wrong. But I mean, if it gets to here, I haven't got it completely wrong yet. It might still bounce off there and come down. So that's where you're sitting in, draw down. So it doesn't really matter. You'll have a bit of red, but it's not a big deal, right? So what I'm looking at is if this gets down to about, let's say I'm targeting $1,000, right? Let's say I'm targeting $1,000. No, targeting $2,000 because you've got $1,000 risk. You're targeting $2,000. I'm just confusing myself here. When this gets to about $700 in profit, okay, somewhere in that region, I'm going to take this and I'm going to move it to at least even $200 in profit, okay? I'm going to move it up a couple of $100 in profit. I'm going to move it up to a level, okay? Then my stop loss is now not $1,000. My stop loss is now $500, but it's okay. It's still a decent stop loss. And if it goes back and it goes back to that $200, you kind of look at it and say, well, that's quite a distance. I might as well take that profit, walk away and try again because, you know, it's moved quite far back and there's a good chance that it'll just go to zero anyway. But if it doesn't get there and it keeps on going, when it gets to 1,500, you're chasing 2,000, remember, then take it, move it up to $1,000 in profit. Now, if it goes back, you've made $1,000, you 1-to-1, you're in the pound seats. And then if it gets to target, take it right up close, $1,800, $1,900, right behind the price. Because if it comes back and takes it, you've kind of just made target, you're okay. If it keeps on going, that's bonus. You can just keep on moving it down and you can just keep on following it, which makes it even better. It's very much a subjective thing, moving your stop loss. It's not an objective thing. It's not a plan of if A equals B plus C, then it's D. It doesn't work like that. You've got to look at each individual trade for what it is as well. and for what's happening in the background and how fast it's moving. So, you can't just say, oh, when it's here, I'm just every time then I'm going to move my stop loss up. You've got to look at it and say, okay, the trade's moving in my direction. It's looking good. I'm going to put the stop loss there. And if it comes back and takes out the money, then that's fine because I've made a profit. But the first time you move your stop loss, and the only time that you move your stop loss, is if you can at least move it to cost, is if you can at least move it up to the cost level. Don't try putting it a lesser distance behind. Don't do that. You can get out of the trade early if you want to. If you just feel like it's not working out, it's not going well. Sometimes you can get out of a trade because of length of time as well, not just because it's going against you or whatever. You've been in it for such a long time, nothing's happening. It's just not working for you. It's the same as having stock on your shelf forever. It's just taking up real estate. It's money that can be used in a better place. Okay, so then you dump it and you get out and you move it on to the next trade. That's basically what I'm talking about. So when you see a situation like that, you might want to move, or if it's just not moving correctly or whatever, but don't take the stop loss and just dump it up behind here and still be a $500 in a loss. Don't take your stop loss and move it up to here for no reason at all. The first time you move your stop loss is when you can at least take it up to cost, which means you'll be in quite a decent profit at that level already. So that's important. Okay. Why do you use trend line instead of moving averages? Just preference, or do you find it works better? I find it works better. I find it works better for me. The moving average, okay, the moving average is a lagging indicator. I've used moving averages over the years, MACD, moving averages, RSI, all of them. And I just find it to be a lagging indicator. So I prefer to, and it's also much quicker and much easier for me. I mean, I could sit here and put a 20-day moving average in here, a 10-day moving average. I could play around with it. And, I just prefer that I've got my resistance, I've got my support. I throw a trend line in, and also I can throw different types of distances. So, for example, I can go all the way back for a big one, or I can go for the short term. And in this case, it's the short term. It's within the range. So in other words, between the support and resistance, I'm putting a trend line in. I just want to see if it breaks structure, because that's all I'm really using the trend line for, is to see if the structure breaks, or to see if it stays in trend. Because if it stays in trend, that's also something you're looking for. Which one stayed in trend? For example, this US dollar Japanese yen. It's staying in trend. Every time it hits the support, it's going up. So I'm not taking that trade short. And I'm also, well, I don't want to take it long because I don't want to take the US dollar Japanese yen long. Let me just see what we got here. There's the S&P 500. That's a bit bearish. There was something that I was looking at here, and it might be the Nikkei. There we go. So for example, the Nikkei. Here I'm only using trend. I'm not using support and resistance. And there I've got my railway line. I've got my channel. Okay. So the top channel, the bottom of the channel. And it's staying in that channel. So here I'm not looking for breakout. Here what I'm doing is I'm looking for, it's coming off the top, it's coming down, it's coming off the bottom, it's going up. It just works simpler. It just works easier than moving average. And like I say, moving average is very much a lagging indicator. What's happened in the, you're gonna make much less profit out of a moving average. So I don't bother with them as such. So for example, here, this is a much longer trend that I've put in here. I could put a shorter trend in and see if it breaks it, that sort of thing. But what I've done, I put a long one in here. And it's been going up, going up, going up, going up, going up for a long period of time. So here's oil. It's been like moving along in a bullish area. There's where it went flat. There's where the resistance was, broke through that. Now it's broken back into the level. Now it remains to be seen what's going to happen at this trend. It's going to hold here, or it's going to break through and carry on down to the downside. The other reason I like to use support and resistance and trend is because the institutional money is easier to spot. For example, if you draw the resistance lines in and the support lines in, this is where the institutional money is moving the money. This is where the institutional money is moving the money in that general sort of area, okay? And if you put the trends in place, you can see which way they're pushing the market and what's going on. It's just, that's all it's about. And it's just keeping it simple as well. But if you want to use moving averages, you can. They're very good, especially the crossover system works quite well. Some people use just a 20-day moving average where the price just gets to the moving average and they just work when the price goes through or if it bounces off, that sort of thing, just like a trend line. That's another way to use the moving average. There's a couple of different ways that you can actually use the moving average to trade with. I don't bother. You know, when I first started trading back in the day, and this is where I ended up going back to this, because when I first started trading, we didn't have computers. We didn't have all this fancy stuff that we've got now. So effectively what I would do is draw a straight line through the middle or down like this. It was a trend line. And I would just work with that trend line. If it was above that, I would buy. If it was below that, I would sell. That was as simple as my trading got. There was no resistance lines. I didn't draw support lines. I just drew one line. That's what I traded with. I drew it through the chart. If it was below that, I was selling. If it was above that, I was buying. Admittedly, it wasn't fast trading either. I mean, it was, we had dial-up phones. I mean, come on, we had dial-up phones. I used to phone the broker and say, could you buy that for me? I mean, it was like phone in the morning. You could sell in the afternoon or sell the following morning, whatever the case. I used to buy the newspaper every morning, every afternoon. That's how we traded back in the day. It wasn't really trading. It was more like investing than anything else. Totally different ballgame. Totally different to what we do now. Okay. Okay. Hi, Rob. Any good advice to give a break? Well, why do you use trend line? Okay. Hi, Rob. Any good advice to give a break-even trader? I've only been trading gold for the last 3 months. Has been trading for just over a year. My advice is start trading other products. Start trading a bit of everything. If you're only trading one item, you're probably trading on lower time frames. So then I would just remember, I don't give financial advice. I'm not financial advice. Everything else, nothing I say here constitutes financial advice, by the way, just so that you know that. And, but yeah, as I say, one thing I would say is get off the lower time frames. Get away from the lower time frames. You're never going to make a profit. You're going to win 8 trades in a row on the lower time frames. You're going to be on the 5-minute time frame and you're going to be trading, and you're going to win 8, 9, 10 trades in a row, not big trades. And then on the 10th trade, you're going to lose a fortune and it's going to take all those wins away, and it's soul destroying. So it's much easier to trade on the higher time frames, particularly if you're starting out and you're still a break-even trader. And then also, don't trade one product. There's so much out there to trade. Like I said to you earlier, the whole strategy is make more on your wins, lose on your losses. And that's because if you take 18 or 19 trades, 18 trades, okay, you lose 9 at $1,000 per trade, you lose $9,000. You win the other 9, you win $18,000, you make a $9,000 profit. That's as simple as get. But if you're trading one trade, if you're trading only gold, if you're only trading gold, your only opportunity is to trade this gold, okay? Because now you believe that you know how gold operates. Believe me, I know how gold operates. I've been trading it for 34 years. It is what it is, okay? So it's a cyclical product. It's gold. It moves up and down, just like everything else. The thing is, you're getting caught up in the charts. You're getting caught up in what the lines do. You're getting caught up in how this moves up and down, rather than getting caught up in making a profit. Rather than caught up in lose less on your losses, make more on your wins, you're getting caught up in the procedure of gold and how it's running. What you're looking for in the market is not how gold is running. You're looking for in the market for opportunity. Opportunity. The VIX is a fantastic opportunity. What do I do with the VIX? I don't apply my plan. What I do with my VIX is I got a different plan for that. I buy it at around 15 and then I switch it off and forget about it and hope that one day it's going to spike and make me a whole lot of money. And you know what? It always does. Never go short on the VIX, only long. Okay? So that's one plan. And then all the other trades are just trades that I'll take. I mean, I'll even trade Bitcoin. I don't like crypto. I'll never invest in crypto because it's fresh air. And I think it's going to go down the hill and out the bus. It's never going to be a great product. Where on earth? I mean, look at crypto. It was 126,000. It's now at 69,000. The other day it was at 58,000, 59,000. I believe it's going to go to 40,000. But if this happened to the S&P, as I said the other day, or it happened to Dow or whatever the case, or DAX, it went down 50%, there would be a national disaster, a world disaster. Everything would, there'd be monetary easing and all kinds of things going on because of that. But when it happens to Bitcoin, everybody just goes, oh, it went from 126,000 to 60,000. That's okay. It's not okay. It's not okay. And it's all because crypto is built on fresh air. There's no asset value. Nobody's got any asset value on it. Nobody even knows where it is and what it's about. It's not a solid item that you can hold. There's nothing. Okay. So you can go and ask Warren Buffett. You can go and ask Jordan Belfort. You can go and ask Jamie Dimon of, the banks and ask them. And they'll all tell you the same thing. It's got no asset value. It's got nothing. It's just two traders trading against each other. It's a market that's been created. So in other words, this could just pop out of fresh air at any time. So investment-wise, no chance. But trading-wise, I'll trade it. Why will I trade it? I don't need to only trade gold, for example. I can trade Bitcoin as well. And there it is. There's a market. It's moving up and down, and I'm not going to stay in it forever. So, if it goes pop, I can get out of it very quickly. Put my stop losses in place. The nice thing about trading crypto is it trades through the weekends and you've always got an opportunity to get in and out of it. So it makes it quite a lot easier for you. I mean, you can trade the US dollars at AR. There you go. It's in a range. It's doing its thing, breaking down, whatever the case. They're all the same. It doesn't matter which one you trade. They're all the same and they're all doing the same thing. All you've got to learn is that the markets do the same thing. They all do the same thing. Nothing changes. Don't get caught in the one big thing, though, and that is some will tell you that you don't need a stop loss because it's cyclical. Commodities and Forex, particularly Forex, is very cyclical. It goes up and down, up and down, up and down, up and down. Don't get caught up in that because, I mean, if you look at the euro US dollar, for example, if you went short when it was at parity, it would have been 2 years ago. You'd be sitting in this market. Your money's all tied up. It's like dead stock on the shelf, like I talked about just now. And you're waiting for it to come back and give you your money back. And it might never come back. It might take forever. And it's still up here at 118. It's never coming back. Or if you went short at 130 and it went all the way back down to 1 and now it's all here. That's if you've got deep enough pockets to hold on to these trades as well. So stop loss is important. You must follow your stop loss strategy. Don't try and hold on to these things cyclically and think, oh, one day it'll come back and I'll make my money back. I've seen a couple of traders on YouTube that have actually done that. And I found that they've been, I say it's not luck, there's no luck in the market, but they were very lucky that their trades turned around, came back and made them some money. Unless, of course, they're just using that as a video or something, I don't know. But yeah, no, that's not going to work. No, that's never going to work. Be careful of that as well. Okay. Right. Okay, welcome. Let's see what is it. This might understand what Blue Mango, he understands the chart, but I believe. Hi Rob, good advice. Give breaking. He understands or read the chart, but I believe. Okay, text prayer. Welcome. Let's see what he says. My understanding. Watching him. Good morning, Rob, and everyone. Using the 30-minute for entry. So you're taking a sniper entry there. Okay, which is using the 30-minute for entry. So if you're trading on the 4-hour and then you're using the 30-minute for an entry, I call it a sniper entry. You're dropping down to the lower time frame to see if there's an entry point there. And there's nothing wrong with that. That's actually fantastic. You can do that. For example, here, you're looking to see if that's a long trade. And this is the euro US dollar. But the problem with that is, okay, what we have here is we have the euro US dollar. This morning I was looking at it and thinking, might be long because we've got this and it's broken through that. It's come back to retest, might go up. But there's a big resistance here, right? So we know about that. Make sure you know about that. Make sure what your preference is to direction of which way you're going. Which way is the market going today? Go to the day chart and say, well, actually, it looks very undecided and it looks like it could actually go short, right? So I'm a bit nervous to go long on this just yet. I'd rather wait for it to break through that level. So all my preferences at the moment are to wait or to go short. And I go back to the H4 and I say, well, okay, it does look a bit long. But if you go back to the M30 now, it's telling you to go long. You don't really want to do that. because you just saw for yourself when you were on the higher time frame that there's a good possibility that's going to drop down. So in all likelihood on the 30-minute, what it might do is go up to this level here where there's a bit of money, take that money and then drop down, which leaves you with very poor risk to reward. So you can use the sniper entry, but just understand where you stand in the market on the higher time frame and what your plan is for any particular trade. That was a bad example, actually, because I'm not going to take that trade right now because it looks a bit iffy. But if there's a more definite trade, just use that example. Just look at the higher time frame, decide for yourself which way you think it might be going or what it might be doing. And then when you drop to the lower time frame, keep that in mind before you take any trades. Don't let the 30-minute decide your trade for you. Let it decide your entry for you. If you decided I'm going short, then go there and let it decide your entry for you. If you decided you're going long, then go there and let it decide your entry for you. But don't let it decide your trade because it's going to confuse you. What I found many a time using sniper entries is what it did to me is it confused me. Because then I'd be sitting on the 30 and I'd be going, oh, that actually looks long. I'm going to take the long trade. And then I would forget about what was happening up at the higher time frame. So it actually messed with my mind. So be careful of that. It does mess with your mind sometimes. The same setup, different instrument. Bitcoin is part of our pensions, just saying. Ooh, that's not good. If Bitcoin is part of the pensions, I don't trust it. I could be completely wrong. I could be totally wrong about Bitcoin, but then so is Jamie Dimon, so is Jordan Belfort, so is Warren Buffett. We're all completely wrong about crypto. And that just sort of says to me, well, if we are all completely wrong, then so be it. But, and good luck to everyone. But I would be very scared to have any of my pension in Bitcoin or crypto. There's a lot of guys out there that will tell me, oh, when I became a millionaire out of crypto. But like I just said to you guys right now, what happened? What happened? It went to 126,000, it dropped to 60,000. That's 50% of your money just wiped off the face of the earth with no explanation whatsoever. Yeah, it's insane, okay, that people still believe in this. And they still believe it's going to go to 200,000 to a million. Maybe it will. I don't know. If it does, it does. If it doesn't, it doesn't. Just remember this one thing. It's got no asset value. It's fresh air. It's got no asset value. It's worthless. Okay. It's not gold. It's not oil. It's not a company. It's not a business. You might say to me, where's the asset value in the S&P 500? Yeah, the value in the S&P 500 is in the 500 companies that are listed on the exchange. There's value in each and every one of those companies. Each and every one of those companies has an asset value. It's got staff, it's got salaries, it's got bank loans, it's got income, it's got asset and liabilities, it's got everything you want to see. And in a country, what about the Forex? What if I buy the dollar? Yes, you're buying America. You're buying into America's policies. You're buying into their inflation. You're buying into their CPI, their economy, and what's going on in their world, what's in their reserve bank, what their country's worth. I mean, just take a look at the country. It's got buildings, it's got armies, it's got airplanes, it's got missiles, it's got everything you could possibly want that's got value, right? So if you were to liquidate America, then you'd get something back on your dollar, wouldn't you? That's the whole idea. It's got asset value. Now show me the asset value in crypto. Show me any asset value in crypto. You can't. Nobody can. Somebody tries to explain blockchain technology to me and they own it. Who owns the internet? You can't own you can't suddenly, the internet's been here forever. You can't suddenly come along and say, we're crypto now, we own the internet. Where did you come with that one? No, you don't. That's insane. No, it doesn't work like that. Hi, Beverly, good to see you. Yeah. Okay, let me just go through this. The same setup, different instrument. Bitcoin is part of our page. Just saying, what's your favorite time frame to use? Favorite time frame, 4 hour. 4 hour time frame always. Gold on the short time frames is crazy sometimes. The VIX is looking good for a buy now. The VIX is always good for a buy, but I always buy it around 15 and just hold it forever. But it does cost money to hold it. Just remember, guys, if you are able to buy it and if you are if you do have the possibility of buying it, that it does cost money to hold it. Eh? Okay, it's not free, but when it spikes and it makes money, I mean, usually it makes quite a large sum of money for me, like 40, 50 grand in a shot. I use the daily 4-hour as my bias for the entry, and you got a bias, and that's the important thing. But keep that bias and keep that daily bias, that 4-hour bias. Look at the daily as well. Just keep an eye on the daily. It's actually quite good information. The higher you go, the more information you've got. And yeah, it does mess your mind. Yeah, I agree. But for me, it's all about positioning. BTC, small percentage of the portfolio. Yeah, you can. Yeah, it's positioning. I get it. It's positioning. But it's a personal preference. For me, positioning in Bitcoin or crypto is dangerous. You remember Bernie Madoff, Enron, and that he was actually so trusted. He was part of the Dow Jones. He was on the board. He was part of, everyone respected him. Everybody thought he was the greatest thing since sliced bread. But he had a 19th floor, 17th floor, something with all this fraudulent trades in there. He never took people's trades. And I mean, it was a bubble, a bunch of fresh air. He took everyone's money and just ran off with it. And he ended up in jail. He ended up doing himself in and all the rest of it. You get this all the time. You know, people, that guy was also in the market for 20 years, convincing people to trade with him and invest money there and all the rest of it. And then eventually it all popped and it all disappeared. People were invested in those companies and they just disappeared overnight, over a weekend. And that was because of the 2008 crash, by the way, because the crash exposed a lot of frauds. So yeah, be careful. Bitcoin, I can see, because I've seen so many things over the years, it looks like fresh air to me. It looks like a bubble. I trade it. Yes, of course, it's tradable. But do I invest in it and leave money and set and forget? No. Because I actually would struggle to see if it was going pear-shaped. I would actually struggle to see which way it was going. You know, if there was warning signals that it's going to go down the blue and disappear, I would struggle to see that. Whereas if you're invested in Amazon, you would see the oncoming train. You'd see it coming towards you. You'd see something's happening here. The results aren't looking too good. You know, companies produce results every year. Every year, a couple of times a year, actually, they give you results of what's happening in the company and how profitable and how it's doing, and give dividends and pay dividends and all that sort of stuff. Crypto doesn't tell you anything whatsoever. Countries, Forex, you think Forex doesn't give you results? Countries give you results. They tell you, they show you what their inflation figure is. They show you what's happening in the country. They show you how the country's doing. So you can look at Forex and you can see how the country, if the country's worth that kind of money. Is the country doing well? Is the country doing bad? You know, you can see it. But Bitcoin, crypto, any of them, you can't see that kind of information. It doesn't exist. You can't see what any crypto is worth. Where are you going to get its asset value from? But yeah, obviously, as you said, there's a bit of positioning, and a lot of people have taken positions in crypto and Bitcoin. That for me is actually quite scary, and I'll tell you why. Because big companies, massive companies, huge, humongous companies have now been convinced to invest in crypto. And if something was to happen to crypto, and if it was to disappear or the bubble was to pop, there's a lot of money in those big companies that's going to disappear. Same thing happened with Bernie Madoff and Enron. There was a lot of big companies that were invested, banks that were invested with him. They lost a lot of money, and it hurt the market. It hurt big time. So, you know, I can see that as well. That could be a big issue. It's a worry. So, look, if Bitcoin was to pop, or crypto, or any of the whole market there was to pop, I would become incredibly concerned about all my investments and trading and whatnot. And I would see a big crash coming if that was to happen. So yeah, I would be very wary if something like that happened. It's not something I want to happen. It's just something I'm very cautious of, let's say. Yeah, caution. Don't throw caution to the wind. Can you make a video on how to invest in VIX with small capital and which broker to use and how long to hold? Because I really want to invest in VIX, but my broker don't allow. Firstly, as far as the broker goes, you just got to look for a broker that will do it. Some of the brokers are quite expensive. I think IG does, a couple of others as well. Now, what you have to look for is, it's actually really simple to invest in the VIX. All you do on the VIX, okay, is you go, here's the VIX, right? At 15, you buy somewhere down the bottom here. You see it's always at this level. Some people have got different numbers on their VIX, so just watch out for that. Just look for that flat level at the bottom, that support. You just buy on that support. But you know what? You hold it until it spikes, because it spikes from time to time, and when it spikes, you make loads of money. Okay, that's how you buy the VIX. You don't worry about my stop loss. I always put down at a ridiculous level of 9.8, which it never ever gets to. I don't think it's ever got there for 100 years. And then I always just hold it and hold it and hold it. It costs money to hold it. And then it spikes and it makes you money. There are a couple of brokers out there that supply it. You have to look for the brokers that supply it. And when you find them, just use them. IG is one of them. You can use them as well. But a lot of people don't like to trade with them because they're expensive. It's just that I've known them for 20 years or something, maybe longer. So it doesn't bother me. Okay. All right. Rob, are you buying stocks right now or waiting for bigger correction? No. My stocks are set and forget. So my actual stock, my actual share stock, in other words, this is trading. Trading, I separate my trading from my investments. Trading is indexes, commodities, forex, and crypto. Trading, leverage trading. That's my fun. That's my enjoyment. That's the stuff that I do to enjoy my day. Okay. My investments, that's serious. And that's only shares, nothing else. I only invest in shares and one or two indexes. Okay. Yeah, ETF, exchange traded fund. So that is there as well, obviously. Why not? The nice thing about shares is they pay you dividends and, they grow over time. But that's set and forget. If I buy a share, I keep it forever. What I do every month, excess income, if there's any excess income, it goes into the kitty and it buys or invests into some of those shares. I'll choose which one I want to add to or whatever the case, because they always move up and down. And I've got shares in America, shares in the UK, shares in South Africa, so all these different places, right? It's called offshore investing as well. So you get the benefit of the rand moving up and down and that sort of thing as well. Now, the idea of shares, and am I buying shares now or waiting for it to correct? I do not look at the position of the market when I buy shares. When I'm buying shares, I literally don't care where this is. I don't care where the market is. Because over time, over a long period of time, the market does this. And if you look at the last 100 years, the market's done this, okay? You get a couple of big corrections along the way, but the market does this. So the only thing I really watch when I'm investing is if a company is going down or there's something wrong with that company. So for example, I buy a share, I set it, and I forget it, and I leave it, and that's it. It's gone. And then if I see something going wrong, I will sell the whole share and buy something else. Now, a good example of that, and the one example I can remember quite clearly in my head right now, is way back when I used to own a company called Steinhoff in South Africa. It was going extremely well, set and forget, darling of the country as well. And I added to it. It got bigger and bigger and bigger. It was making me a fortune. I was really happy with it. and they listed in Frankfurt. And immediately I heard the word under investigation. I heard the words fraud. I heard a few things there that just said to me, alarm bells, red flags. And I was one of the few that got so lucky because I sold it somewhere near the top. Because I said, do you know what? I don't like hearing that. These German guys know what they're talking about, this Frankfurt Exchange. When they're investigating, something is wrong. Something is not right. So that's the one time when I take my share and I say, well, set and forget is out the door here. Then I take the whole package. I sell everything, the entire amount. I take that money and I put it into either my other stock or I buy a completely new investment that's added into the portfolio. So it's not luck. Like I say, it's not luck because at the end of the day, I was watching, I heard the words, and I took action. So it wasn't lucky that I got out of it. It was that I was listening ear to the ground. I heard the words that I don't want to hear in my investments. I said, well, in that case, better safe than sorry. Let me sell it and put it into something that's safe, which I did. And that, for me, is how I operate with the investments. Otherwise, I just keep adding to them and I keep investing in them. So I look at them as individual entities. Companies grow, companies make profits, companies have assets and liabilities. So I'm invested in that management team. I'm invested in that company, and I'm looking at them a growth over a period of time. I'm not worried about what the markets do, whether the markets go up and down, or what happens next in the markets. That doesn't concern me in the slightest, because the companies will always be there. Unless, of course, it's something serious. And like I say, I've got my ear to the ground for that. And if I hear anything untoward against that company that's not looking too good, I'm out of there. I mean, that's how I do it. That's how I do it. It doesn't matter whether the country's in America or it's in South Africa. Just recently, there was the story of Pick n Pay is not looking too strong here. And I decided to sell everything in Pick n Pay and move it into Spot. That's as simple as it gets in South Africa, for example, just because I don't trust it. But otherwise, you buy it, you keep it, and I just add to it every month if I can. It doesn't have to be every month, but as often as I can. Right. No, Madoff did really well, actually. He actually did extremely well by just nicking people's money. That's all he did. He was a criminal at the end of the day. He wasn't really a trader, but I mean, he was so trusted. I mean, he was on the exchange and everything, and all he was doing was making fake trades for people. He wasn't putting real trades in. Crazy when you think about it. Absolutely crazy. And Ike was like just getting away with it. Absolutely insane. It's rare to find real wisdom on YouTube these days. Most are either fake or selling courses. Thank you, Rob, for showing up with honestly. God bless you. Thank you. That's always a pleasure. Yeah, I don't mind. I'm doing this for fun. So, yeah. When I say I've been doing this for a long time, it's trading. It's not YouTube. YouTube's very recent. Well, I think I'm doing 2 years now on YouTube. It's not bad. I'm having fun building this channel. It's actually great fun. Because at the end of the day, some people have said to me, Rob, why do you have a YouTube channel? Well, it's quite simple, really. Trading is quite boring. There's not much to do in trading, and especially when you've been doing it as long as I have. It's like take a trade, move on, do whatever else. So I've got to keep myself busy. So I do that, keep myself busy. And it's also nice to have a community. It's nice to have people to talk to. If you haven't joined the Telegram channel, get to it. There's a Telegram channel there as well. There's quite a lot of nice people on there as well, helping each other. That's a bit of fun. And yeah, so I do it for fun. I do it because I enjoy it, and I enjoy building things. I enjoy building things up, and I don't give up on things easily. So I've taken this task on. When I took the task on, when I took YouTube on, one of my main factors was too many people are telling people it's easy to trade. So I thought, no, I'll have my say. And I put a video out telling people how it's not easy to trade. And it got 1 view, and I thought, wow, that was a waste of time. Gosh, shouldn't have done that, should I? But then I thought, oh, what the hell, try again, try. And then I started to get like addicted to it, and I started to enjoy it, and it started growing. And when it started growing, I thought, well, people are interested. And then I thought, well, now I'm going to actually turn this into something and make it something nice, which I've now, I believe, done quite well with. There's still a lot to learn, but it's been fun. It has been a lot of fun. It's good having this community growing and you guys around and what have you. It's just great. I enjoy it a lot. It looks like oil is getting tails here, so it's a good chance. Well, I think it might come down to the support and maybe have a bit of a bounce, start bouncing back up again. It should be interesting to see what it does. And if it bounces or if it goes up. Really cool. Really cool. But the big one is, what's my US dollar, Canadian dollar going to do? That looks like a very undecided candle there. It doesn't look great. We'll see what happens. It'll probably go down from there, start falling off the cliff, let's say. On that note, it's been great having you guys here. I think I'm going to head on my way and go down the tunnel. But yeah, look at this. Look at the S&P 500. Undecided as well. So I think it's very dependent on that today. What's going to happen? How do you know what market is the market to trade on a particular day? Just support and resistance levels. The best way to look for the right trades is take your support and resistance levels, put them in. Don't try and trade everything. It is difficult in the beginning if you're used to trading one product, because, I mean, look at that. There's a huge amount of things to trade. But yeah, you can go through that if you want to. But I normally choose like maybe 20 items that I want to look at all the time and just play around with them and use them. But if you're looking for a trade, just take it, look at it, put a support and resistance level in on the day. I normally take it from the day and then go back down, put your trend in and see if there's any trade coming, any trade available coming towards you, and then just take it from there. That's just look for the trades that way. And then if you've got a lot more things to trade, then you've got something to trade with. Whatever system you're using, it doesn't really matter. Some people just use this moving averages or fib or whatever the case. Just put that in and then just follow and use that and you'll be fine. But okay, on that note, it is time for me to go. My Tuesdays are, sorry Beverly, my Tuesdays I've stopped at the moment, and there's a good reason for it at the moment. I have someone in hospital that that's been in ICU for 3 or 4 weeks, and I'm following up on that, and now they're going for rehab and all that sort of stuff. So I've been a bit busy on the background, so I've dropped the Tuesday one for now, and I've decided to just keep the Thursday one going for now. And when I'm ready to bring the Tuesday one back, I shall bring it back to you guys. But yeah, there's a few things like that are important. So I do keep my eye on that as well. Do I think the DAX is too late for a buy? The risky thing about buying the DAX right now, Kevin, is firstly, wait for it to break past this prior high. You see there's a prior high here, the 4 hour. You wait for it to break past that prior high over there, and then you can buy it. But just keep your eyes on the American markets, because they haven't broken through resistance. And if these go down, the DAX is also going to go down. Okay, so just keep your eyes on that. I wouldn't jump into the DAX just yet. Wait. You're not too late. Just wait. Okay. Look, if you'd bought it down here, great. But it is very close to resistance. So if you want to buy it, you've got to wait for it to break through that prior high before you buy it. I wouldn't buy it as it stands at the moment. Yes, it is too late in that sense. Yeah. Okay. So yes, like I said, on that note, thanks for watching. And I'll catch you guys on the rebound, I presume. Catch you guys soon. And we'll be back on next Thursday with another amazing, fantastic live show for you. And we'll continue on from there. And we'll have a bit of fun. But it's been fun having you guys. I want to thank you guys for being here. It's been enjoyable. And I hope you guys have picked something up from it. You guys must all enjoy your day. Must all have fun. Make lots of profit. come back and watch the other videos as well. Those of you that haven't joined the Telegram channel, make sure you join. It's a bit of fun. Everybody helps each other. And also, yeah, for those of you who haven't joined the members area, join that too, you know, supports the channel. And subscribe if you haven't subscribed. Hopefully you guys have all liked this video. Hope you all liked this video at any one time. It's important that you like the video. Till next time, thanks for watching.